If you're trying to figure out where to invest in commercial real estate right now or where the best job opportunities might be over the next 12 months, there's one report that tends to get a lot more attention than almost any other publication in this industry, and this is the annual Emerging Trends in Real Estate report from ULI and PWC. This report puts together survey responses from hundreds of senior leaders at some of the biggest players in commercial real estate, including Brookfield, CBRE, Prologis, Invesco, and Tishman Speyer, just to name a few, and then uses that data to rank over 80 different US metros on their overall real estate prospects heading into the following year. And with ULI's fall meeting being held earlier this month, the 2026 version of this report was just released, and there are some really interesting changes to this year's rankings from the 2025 report. So in this video, we'll walk through the top 5 markets for overall real estate prospects from this year's report and why these cities are getting so much attention from institutional investors right now. So to start off at number 5 on this list, we have Houston, Texas, which was down 2 spots from number 3 in the 2025 report. Houston is home to over 7.5 million people and produced a gross metropolitan product of almost $700 billion from Q2 2024 to Q2 2025, which was a 7.9% increase over the previous year. Houston is also one of the biggest distribution hubs across the entire United States, with 50% of the country's population living within a 1,000-mile radius of the Houston metro, and the Port of Houston handling over 70% of U.S. Gulf Coast container traffic and 97% of all Texas container traffic. This is also a big reason why over 7,000 manufacturers produce more than $75 billion in products in the Houston metro each year, and Houston is also home to more than 500 aviation and aerospace companies, with 10 of the largest 50 U.S. aerospace manufacturing firms having a presence in the metro. Houston also came in at number 3 in this year's report in home building prospects, and home values in Houston are still almost 28% less than the US national average. Now, coming in at number 4 on this year's list is Brooklyn, New York, which jumped up 10 spots from number 14 in the 2025 rankings. Brooklyn is currently home to more than 2.6 million residents, which, if this wasn't one of the 5 boroughs of New York City, would make this one of the largest cities on its own in the entire United States. And while office fundamentals in many US metros have struggled a lot since the spring of 2020, Brooklyn has actually seen the opposite, with the Brooklyn Navy Yard, South Brooklyn Waterfront, and Williamsburg Greenpoint submarkets seeing office vacancy rates drop by an average of 7% over the last 5 years. Apartment occupancy in Brooklyn is also currently sitting at 98%, with apartment rents in the area increasing by 3.2% year over year in the second quarter of 2025, which was almost triple the national rent growth rate during the same time. The bottom line for this market is that Brooklyn has seen a huge uptick in interest from both individuals and businesses, as rents in Manhattan for both apartments and office space have gotten pricier and pricier over the last few years, which has and likely will continue to lead to very strong demand in this market. Now, moving on to number 3 on this year's list, we have Miami, Florida, which was down 1 spot from number 2 in the 2025 rankings. Class A office rents in Miami jumped by 7% in just the last year and by more than 50% since the first quarter of 2020. And for newly built office products, specifically in the Miami metro, asking rents have doubled over the last 5 years. The Miami metro has also seen the lowest sublease availability percentage of any office market in the US, and overall vacancy rates that have also dropped by 20 basis points since the start of 2020. And on top of just demand for office product, Miami handles 85% of all US air imports from Latin America through Miami International Airport, and Port Miami is one of the 15 most active container ports throughout the entire country. Florida is also one of 8 US states without a state income tax, and with very mild winters and hundreds of big-name companies moving their headquarters to the area over the last 5 years, Miami will very likely continue to have extremely strong real estate fundamentals heading into 2026. Now, coming in at number 2 in this year's rankings is Jersey City, New Jersey, which jumped up 17 spots from number 19 in the 2025 rankings. And similar to the demand story we just talked about in Brooklyn, apartment occupancy rates in Jersey City came in at 97.2% in the second quarter of 2025, despite apartment inventory in the market jumping by 20% over the last 5 years, and year-over-year rent growth for apartment product in Jersey City came in at 2.4% in Q2, which was double the national rent growth rate during this time. And this strength in apartment fundamentals has also led to an uptick in transaction activity in this market, with 65% of Jersey City's $177 million of commercial real estate transactions in the first half of 2025 being allocated towards the multifamily sector, which was also almost double the national average of 33%. More than half of Jersey City's population has a bachelor's degree or higher, with many of these people taking the PATH train or a short ferry ride into Manhattan for work, and with apartment rents coming in at almost 35% less than New York City apartment rents, and Hudson River waterfront office rents averaging 42% less than Manhattan office rents. This market has seen extremely strong demand for real estate that's very likely to continue into the new year. Now, finally, the number 1 market in this year's report also had the top spot in the 2025 rankings, and this is Dallas-Fort Worth, Texas. Between 2018 and 2024, Dallas attracted 100 new corporate headquarters into this metro and now ranks as the second largest financial market in the country, only behind New York. And according to Moody's Analytics, the DFW metro is projected to see the highest job growth in the entire United States over the next 5 years, and with 20 office to residential conversion projects that are either underway or in the planning stages right now, we could also see a huge reduction in office supply at the same time that demand is increasing in the market. The DFW metro also ranked first in this report in home building prospects, and similar to what we talked about with Houston, home prices in Dallas were almost 17% less than the US national average as of September of 2025. And with a very pro-business environment in the state of Texas overall, no state income tax, and pretty mild winters in comparison to the Northeast or the Midwest, the Dallas-Fort Worth metro has some of the most attractive long-term real estate growth prospects of any market in the country. Now, when I step back and take a look at these rankings as a whole, there are a few very clear patterns that I see among these markets that paints a much clearer picture of the main characteristics that big capital allocators are looking for today. And the first thing I noticed is that many of these markets are major distribution hubs, with Houston and Miami having some of the busiest ports in the country, and DFW having one of the most active airports across the entire globe. 3 of these markets are also located in Texas and Florida, which are considered very pro-business and have no state income tax. And aside from Miami, all of these metros also have a relatively lower cost of living than neighboring major markets, while still offering strong job prospects, with Dallas and Houston being significantly less expensive than Austin, and Brooklyn and Jersey City being significantly less expensive than Manhattan. Ultimately, these rankings give us some really helpful insight into where institutional capital might be headed over the next 12 months. And if you're trying to land a job at one of these firms, or you're looking to invest your own capital in commercial real estate in 2026, make sure to check out our all-in-one membership training platform, Breaking the CRE Academy. A membership to the Academy will give you instant access to over 120 hours of video training on real estate financial modeling and analysis. You'll get access to hundreds of practice Excel interview exam questions, sample acquisition case studies, and you'll also get access to the Breaking the CRE Analyst Certification Exam, which covers topics like real estate pro forma and development modeling, commercial real estate lease modeling, equity waterfall modeling, and many other real estate financial analysis concepts that will help you prove to employers that you have what it takes to tackle the responsibilities of an analyst or associate at a top real estate firm. And if you like this video and want to see more content on the channel like this, make sure to hit the like button and let me know. And let me know in the comments which markets you're most bullish on heading into the new year. As always, thanks so much for watching, guys. I hope you found this helpful. Subscribe to the channel if you haven't already to see more videos like this every single week. And I'll see you in the next video.